one kind of message that I want to, make sure that people leave with today is the fact that we have continually and we still are underestimating the power of that fiscal. And everyone's saying, well, all the money's been mailed out, all the savings are finished, but there's still a lot of money in terms of the Inflation Reduction Act, which is basically an infrastructure act that still hasn't been spent. If you think about the government, if there's one thing we know, it's that they're slow. So when they allocate money to go out and spend, to build chip fabs or whatever it is in Texas, that doesn't get done right away. And when you go look at the state level, you'll see that that sort of infrastructure spend is just starting to hit now. And that's why I think that people that have continually believed that this monetary kind of tightening would stop the economy have been mistaken in that they've kind of continually underestimated the power of fiscal.
Welcome to Thoughtful Money. I'm its founder and your host, Adam Taggart. We're all aware of how the pandemic threw the economy and financial markets into unprecedented disarray. And for the past 2 years, investors have eagerly awaited them to return back to a state of normalcy. But has normal changed versus the pre-COVID days? How much of the old playbook no longer works well, if at all, in today's world? For answers, we're fortunate to speak today with market veteran Kevin Muir, founder and editor of The Macro Tourist, the highly acclaimed newsletter that currently ranks as the number 12th largest financial substack in the world. Kevin, thanks so much for joining us today.
Well, thanks for having me on. It's a real pleasure.
Hey, it is a real pleasure, Kevin. Been a huge fan of your work for many, many years. It's wonderful to finally meet you in person. Thank you for making the time here in the holiday season to come on the channel. Lots to talk about with you. If we can we just jump off at the high level question I like to start these discussions with? What's your current assessment of the global economy and financial markets?
Well, I think you framed it really well, Adam, when you talked about how COVID has changed the world. And I kind of continually am amazed at how everyone's expecting this cycle to look like all the other cycles. And I have a buddy, Dario Perkins from TS Lombard, and he's been saying for a while, he says, I don't know why we're expecting this business cycle to look like other business cycles. Because if you think about it, we sent everybody home, told them that, where this pandemic is hit, everyone go home. Then we mailed everyone checks. Then we went and reopened half the economy, then the other half. Then we did another, Inflation Stimulus Act or Inflation Reduction Act, but it's in essence an infrastructure bill. This cycle is so much different than all the previous other cycles. And I think that a lot of the playbooks that we used to use in terms of like yield curve or this, the soft indicators versus the hard indicators, all those things kind of need to be rethought. And that's what I think a lot of the investors are struggling with. And I think that's what we should chat about today.
Okay, great. I really want to dig into that. We've talked a lot about the unprecedented deformations that COVID wreaked on the economy and on the markets. So we've talked about that a lot on this channel. Would love to get your thoughts, your specific thoughts on that as we get into this in terms of what specifically has changed that we have to pay the most attention to and what you think it's likely to bring in the future. I know some of this it's a little bit of a crapshoot because you're in some ways trying to predict what something that's never been in the state before is going to do. So it's going to keep things interesting. But look, it's been quite a year in 2023, right? We went into this year, kind of like you said, everybody kind of looking at old playbooks saying, oh, okay, well, look, obviously a recession is going to happen, early this year. And 2023 was really the year of the recession that wasn't. And here we are at the end of the year. And, everybody's kind of on the no landing plane at this point in time. Markets are I want to say they're in melt up. If they're not in melt up, they're on their way to melt up status.
Yeah.
Nobody seems real worried at this point about a recession. Powell certainly isn't, right? He basically just gave everybody the green light that, hey, not saying mission accomplished just yet, but I can see the light at the end of the tunnel here. Yeah. Obviously things outperformed everybody's expectations. Why? What do you think is responsible for this huge surprise to the upside?
Fiscal. And I think that people have missed this the whole way along. They've underestimated the power of fiscal. And if we think back to 2008, when we had the great financial crisis, we tried to fix everything with monetary stimulus. We lowered rates to zero, and then that didn't work. We did QE. And then when that didn't work, we tried Operation Twist. And then we tried Operation QE number 2 and number 3. And that was one of the slowest recoveries on record. Then fast forward to 2020. Well, this time we learn our lesson and we say, well, monetary stimulus doesn't work as well as we think it does. Let's try some fiscal. And not only did we try fiscal, we did way too much. And it's just it's crazy how much we've done. Especially, like, I'm a Canadian, but America, when you look at the amount of fiscal as a percentage of GDP versus the rest of the world, they did way more. You guys did absolutely, like, I think it's 24% of GDP in terms of fiscal stimulus. The next closest was 18. I think we were 16% of GDP. So we not only did we have the kind of the monetary stimulus that everyone has always been afraid of and talking about, but we've had this unprecedented shift in terms of the amount of money that the government has spent and has put into people's pockets. And the one kind of message that I want to, make sure that people leave with today is the fact that we have continually, and we still are, underestimating the power of that fiscal. And everyone's saying, well, all the money's been mailed out, all the savings are finished, but there's still a lot of money in terms of the Inflation Reduction Act, which is basically an infrastructure act that still hasn't been spent. If you think about the government, if there's one thing we know, it's that they're slow. So when they allocate money to go out and spend, to build chip fabs or whatever it is in Texas, that doesn't get done right away. And when you go look at the state level, you'll see that sort of infrastructure spend is just starting to hit now. And that's why I think that people that have continually believed that this monetary kind of tightening would stop the economy have been mistaken, in that they've kind of continually underestimated the power of fiscal.
Okay. And we've talked about this on this channel before.
We don't got a lot
where
of time. So get ready.
Funny, I'm going to go through a quick evolution of ways in which I've talked about this as I've talked to different guests, but I used to position it as the Fed was putting its foot on the monetary brakes on the economy, and yet on the fiscal side, we were jamming the accelerator. And actually, the Fed and the banks, that were putting on the brakes, and the fiscal side jamming the accelerator. And it seems to date that the accelerator has been winning out, right?
That's correct. Yep.
Yep. And first, let me ask you a question that I've asked a lot of people in the past. Haven't asked it for a while, so I'm curious to hear your thoughts. If you consider all the excessive stimulus that we shoved into the system during COVID as the proverbial pig within the python, what's your best finger to the wind guess of how much pig is still left in the python? And maybe in your answer too, there are still some programs out there that seem like they're even still like feeding the python pork chops. He's not on a starvation diet yet. So how much has left to pass through that? Are we past halfway? Are we on the dregs? Or is this bigger than folks are expecting?
So I think that you need to think about the stimulus in different ways. And there's no doubt that the consumer portion of it has almost gone. And so when you see those sorts of analysis, I think that the Fed, one of the Fed regions, had this analysis about when the consumer savings were going to be depleted and stuff. I believe that the kind of that extra, sugar high that we got by mailing people money and putting it into their checks is almost gone.
Right. And all the forbearance programs and all that stuff.
Right. And I think we're almost through that. And that is what the market has been concerned about when they've been thinking about the recession that was imminent and was going to come and hit at any point. But at the same time, as I mentioned, those stimulus programs, or the Inflation Reduction Act, which is really an infrastructure program that's designed to kind of bring kind of manufacturing back to the States, that's just started. Like that we have barely felt that. And we are going to go and we are going to be surprised at how many jobs continue to be created. We're going to be surprised at the amount of capex that is going to occur in the U.S. in strange places that we're not expecting. And so I would argue that the nature of the stimulus has changed, but it's still got a long way to go.
Okay. So one of the questions that folks have asked around that is, how long can this fiscal winning out over the monetary efforts, and now it sounds like the monetary efforts might start easing a bit.
Right.
So maybe they actually have won the game, won the battle. But basically the big question is sort of like, hey, so will this just continue through the election? Like, is this all, whether it was all to do with, rescuing the economy, or whether there was, some sort of additional agenda of trying to keep everything goosed through the November 2024 elections. Is your expectation that we're still going to sort of see a rising tide of fiscal spending through the end of this coming year, or do you see it maybe ending sooner?
No, 100%. We're going to see continued rise. There's the reason that there's the kind of time-honored election cycle when it comes to stock markets and economy, because presidents and parties spend based upon that cycle, and this will be no different. And so the real question is the economy the same as the market? And that might be something that will be different. Just because the economy is doing better over the next year doesn't necessarily mean the stock market's going to do better. And I think that too often people kind of confuse them and think that they're one and the same. Whereas I think that very much I'm confident that the economy will continue to do well, but I'm not as sure about the stock.
Okay, and obviously I'm going to get to your market outlook in a bit. This topic of fiscal spending, what you kind of worry about here is like the bear's gotten the taste of meat. Right? Right? Like once he's tasted it, he doesn't want to eat anything else, right?
Yeah, that's right.
Of course, politicians love nothing to do but spend. And honestly, in a pinch and hard times, consumers they're not going to turn away handouts. In fact, they're going to demand them because they're just trying to put food on the table, and you did it before. So the precedent's been set, right? So are we in a new era when we're sort of talking about new forms of normal? Are we in a new era of just kind of ever fiscal spending from here? And what does that look like in the long run? My mind says that has a bad ending.
I do believe that the world changed at COVID. If we step back and we think about from 1982 when
they must have tilted their butcher
back inflation with high monetary
just up here kind of
monetary interest rates. Every single recession
there.
that we've experienced, we fixed it by going and lowering interest rates.
Done it.
And if you go look through the period of all the different interest rates, every single time we had to lower it to a new low, and then on the subsequent rise, interest rates didn't get as high before the economy rolled over. So during that whole period, we were relying solely on private sector credit creation to affect the business cycle. And eventually what happened was that we stacked so much private sector debt on it that we hit the great financial crisis. We lowered rates to zero and it didn't work. So then we tried all this, extraordinary measures of monetary stimulus. Those still, in essence, didn't work. And what happened in 2020 was they said, okay, this is no longer working. We have to think about other ways that you can create money. And so we talked about the fact that lowering rates encourages banks to lend. Credit creation, that's private credit creation. And what this time they decided they were going to do, government, they were going to spend the money into existence. And I'll tell you one thing that over the years, I'll tell you a little bit of my MMT story. I at first when I heard MMT, I was like, that sounds like the stupidest thing I've ever imagined, right? Like I would hear things and I would hear them talking about spending money into existence and all this stuff. So I went and I actually decided, okay, if I'm going to be able to argue this, I should be able to go and figure out where they're wrong. And if you think about MMT not as a prescription in terms of what should be done, but as a description of how the economy works, they were actually, a lot of their theories are just spot on correct. And what they argued was that the government can spend money into existence up until the point where real resources are constrained. And then from there on, you get inflation. And if we think to the problem of the great financial crisis, we had a situation where private sector was not spending. And what did the government do? Instead of actually stepping in and spending when there was lack of private demand, they actually did the same thing. They cut back. And we had a situation where Obama, even though everyone talks about him being the spendthrift president, if you look at his discretionary budget, it declined like 3 out of the 4 years after the great financial crisis. So we have a situation where the government previously did pro-cyclical cuts in spending at a time when the economy needed the opposite. Now, the pushback to MMT has always been, well, once people start spending and they realize that they can spend this, they're not going to stop. And that's kind of the argument you're just making. And I am sympathetic to this. And I've always said that once like MMT, you can rail about it, you can spit on the ground every time it's mentioned. But if that's the way the economy is headed and that's our way our society is headed, why are you sitting there arguing with the market? Like, just take advantage of it. Say that this is where we're headed and this is what we're going to do. So therefore, I need to change my portfolio. So I'm a big believer in trade the market that you have, not the market you want. And so I look at it and I say, okay, if you look at the median voter, and that's something Marko Papic, one of my buddies from Clock Tower, talks about all the time. And I think it's a great way of thinking about the political landscape or in what the person does. If you think about the median voter in 2008, when we had the great financial crisis, was all about balancing budgets. They were like, okay, we need to balance the budget. We need to get our spending under control. Think about 2020. Like 2020 was like, no, we should spend. And even 2021, 2022, think about the Republicans. They were like, oh, we're going to shut down the economy to balance budgets. And then when it came to it, they didn't want it. So I completely agree with you that the bear has tasted, the taste of meat, and he's not going back to eating blueberries. Like we're in a new era where we're going to have continued fiscal spending. And yes, it'll go up and down in waves as we get kind of cyclical moves. We'll have a recession, and this time, instead of trying to fix it with monetary, we'll also again use fiscal. And instead of arguing about that and deciding that which one is better or which one is proper or which one is moral, just say this is the way it's going to be, and I need to adjust my portfolio. And what that means is that we are going to have a series of inflation. Higher sets of inflation for some time to come. I used to argue that 2% was a ceiling that we would get in terms of every time we kind of popped up to 2%, it went back down in terms of inflation. I think that 2% is going to be the floor that we bounce off of. So I could see a situation where for the next decade, we average 3-4% really easily.
Okay, I want to get to the Fed in just a second.
Nerd.
Okay, so first off, I'm sure there's already a little bit of a rage fest going on in the comments. Oh my God, this guy's pro MMT.
I don't think you are. End of this
what I hear you saying is you understand, a good amount of the logic behind it, but right or wrong, you just think it is going to be more of the playbook that the central planners play by going forward, and so rather than fight it and get steamrolled as an individual investor, play the markets that you have ahead of you. And I'm going to jump to a punchline here that maybe we'll talk a little bit more detail about in a bit, but I believe that you are sort of a proponent of owning gold, and I believe that's probably because you expect there to be inflationary repercussions from this new, more MMT-driven playbook. Is that an accurate statement?
Yes, over the long run, I believe that is one reason to own gold. Another reason I think to own gold, which I actually think is even almost a better argument, is the fact that once Russia went and took over or invaded Ukraine, the world changed in terms of when the Western and led by America confiscated those FX reserves.
We weaponized the financial system against.
That's correct. And if you're sitting there and just put yourself into China's shoes for a second, you're sitting there with how many $1 trillion of U.S. reserves. As a percentage of those reserves, you have a tiny amount of gold. It's tiny. Like it's yes, they are one of the biggest holders of gold, but as a percentage of the reserves they have, it's very small. So if they were to just go and get their reserves up to the same level that a lot of the other countries are at, it would require just gobs and gobs of buying in gold. And that's what I think we're seeing. And if we look at this past year, what did we have? We had rising U.S. interest rates. For a long time, the U.S. dollar was rising, and yet gold hit an all-time high.
Yeah, it hung in there.
And right, and so
And sorry to interrupt, but real interest rates were the highest they'd been in a long time, which
That's
tend
correct.
to be kryptonite for gold. Yeah,
that's right. And so I've been arguing for a while now that when you're, again, throw away the old playbook. The old playbook about gold being tied to interest rates or real interest rates and US dollar, it's not as important as just what the central banks are doing. And the central banks, if I was sitting there and I was running the People's Bank of China, I would just be buying it every single day. And it would just be, it's almost imprudent not to be. And so ultimately, I think that you don't even need that kind of increased inflation for gold still to work.
that's
I
just
think
gravy, is what you're saying.
Yeah,
Yeah.
I
see what
really
you're
do.
saying
And listen, do I think that when the dollar finally goes down and the interest rates get lowered and real rates go lower, that won't help the gold? Of course it will. That'll be kind of an extra little boost, but that's not the real driving force of this bull market. The real driving force of this bull market is the Bank of China buying gold because they have to.
Okay, so it's much more a geopolitical factor where it's sort of
That's
a
correct.
national sovereignty priority. So when you said China's got a long way to go to catch up to other countries, are you measuring that as a ratio of gold holdings to U.S. Treasury holdings? Like just
That's correct. Like I can't remember the numbers off the top of my head, but I think a lot of, like, Russia, I believe, was 30 or 40% gold, and there's no way China's going to get to that level. But there's lots of countries that have 5 to 10% of their reserves in the form of gold. And if China were to do that, it would suck up every single gold ounce that we mine around.
Okay, and that's, I guess, the punchline I was looking for. But guesstimating here, like, is it a 10x increase from where they are right now, a 100x increase? Like, what's the size of what that catch up would need to be?
I think they're going to try to buy everything they can without sending the prices to them.
Okay,
I just think they'll just be constantly on the bid, and I think that's what we've seen. It doesn't matter, what the rates are doing. It doesn't matter what the U.S. dollar is doing. It just keeps driving higher and higher and higher, and that's what I think it's going to continue to happen.
Okay, well then let's look
it's
from here
Zim. I
then.
was like,
So
why is that butcher
we've got
so
gold.
fast? The Zim has the speed.
I don't know
boost
whether
in
you
it.
ascribe to this or not, but it's sort of made this like decade-long, cup and handle with the triple top and all that. And it's if you look at it, I was just looking at it, a chart of it this morning. It's like poised right there to break out, right? And you look at the landscape that we have right now, which is, the Fed basically just told everybody, hey, we're going to start winding this down sooner than later, right? So everybody's now thinking pivot sooner. Everybody's thinking, maybe QE again at some point, right? Hard not to see that. I know you're saying that's not the driving force, the primary driving force behind gold right now, but hard not to see that adding additional wind behind gold sales, breaking it above that, out of that handle. And then, maybe there's some real momentum chasing that goes on from there. What do you think?
Oh, I think I've been saying for a while that I think we're going to
Why
have
did their butcher run
$1,000
away?
a week in gold. And I know that
Wasted
sounds
salt.
ridiculous,
Like, I
but
don't know if it
if
was
you
on
think
purpose
about it,
or
it's
not,
not as crazy as it sounds. It's a small market when you look at the other big markets out there. And it wouldn't take much. Like, I could see one day we get up, it's up $300, then the next day it's up 200, and then another 400, 200. It really wouldn't surprise me if all of a sudden, out of nowhere, the thing just takes off like that.
Okay.
So I'm open to those sorts of moves, and I almost expect them eventually before this bull market is over.
All right, and sorry, I didn't mean for us to fall down the gold hole, but this came up at an opportune time. So you may not have an answer to this, but I remember hearing stories from guys like Ron Paul, who during the Volcker era,
Is that good?
met with Volcker, and Volcker would be saying like, right, where's my daily gold report? And the central bankers were using gold as a mirroring. They were concerned about its ability to mirror inflation as they were monkeying around with stuff, right? And so they had a vested interest in trying to keep it contained. And long-term precious metals investors, hard not to be a long-term investor and get really frustrated by good conditions where the precious metals don't perform the way that you want them to, or they get monkey hammered at predictable times or whatnot. So I think there's a general sense, true or not, is that it's a pretty manipulated asset to begin with. But in this new world order, do the central planners care as much about keeping gold contained, or could they
No,
you know,
they don't care.
lift their
The
foot off
Federal
the throat.
the Federal
Hey, there we go.
Reserve doesn't care what gold
I
does.
need to set up a,
Okay.
a
Like
Stream Deck
they care
thing
what inflation does.
that'll
They
make
care
my
about what bonds
YouTube
do, but they
video
don't
go
care what gold does.
o-
Like
toggle on
you
and off.
sure at the margin they're going to watch it and stuff, but they're not going to change policy because gold's going up. They understand that gold is a different sort of asset, and for the reasons that I just mentioned, it could go up on its own even if inflation is very well behaved and there is proper monetary policy. Like we could just have a situation where China wants more. And if that is the case, then we could have gold going up, and doubling over a course of a year. And it doesn't mean that the Fed is too loose. It could just mean that the China wants them.
Okay. Well, at the risk of starting like another fight in the comment section, I don't want to go deep into this, but just since we're on the topic of sort of monetary inflation hedges, per se, I know you're saying that's not the exact main reason to own gold here, but thoughts on Bitcoin and or any other cryptocurrency that you think?
I am the worst. Listen, Adam, you don't want to ask me my Bitcoin because I am an idiot. I literally got told Bitcoin at $5. Of this kid beside me was I was trading, and he was a computer guy. He told me Bitcoin at $5. He explained it all to me. I told him that was the stupidest thing I'd ever heard. Don't mention it again. He then
Know
came back to
that-
me a month later. So that thing you told me is the stupidest thing ever. It's now $50.
The first,
I was at least smart enough to realize
the first thing in my social media things, the bottom right, is TikTok, I believe. Yeah, TikTok. They didn't have a TikTok logo in the thing, and I couldn't edit it. It was a little annoying.
if it goes to 50, it could go to
Although I haven't
500
posted
or
anything
maybe
on TikTok in
5,000. I
3
thought
years.
on some fluky chance. So
Well,
I
maybe I
actually
will.
started way back when Bitcoin was 50 or $100. I started mining it. I had an interlisted ARB machine. We did all these sorts of fun things with it. And then it kind of collapsed and it went quiet. And people forget that it went quiet for a few years. And I was just like, I was always kind of a skeptic. And I thought, okay, well, that's it. It's never going to go again. And I've just completely missed it. So I am not the right guy to talk to. I am a little bit of a skeptic. At the end of the day, I think that it's an asset that the government can control and shut off more easily than people believe. The one thing about gold is if you own gold and you physically own it in your possession, it is nobody's liability.
Right.
Now you might say that about Bitcoin. You'll be like, no, it's up there. It's nobody's
Still more
liability.
Google
Well,
games.
it's still, you have a liability that the network needs to exist. Like just take us for a second and imagine we have a situation where China invades Taiwan. I don't think this is going to happen. Well, let's just say it happens. We have a situation where China invades Taiwan and all of a sudden they shut off the internet, the pipe between the US and China. Now, all of a sudden we have the fork of the Bitcoin and we have, miners in China, miners in the US, and they can't go back and forth. I still think that there's more of a kind of a liability to the network than people think.
More
And
counterparty risk.
Yeah. Well, it's not counterparty risk so much as it's kind of technology risk, but ultimately at the end of the day, I believe the government controls that technology more than we think. Like I think there's 7 big routers in the whole world that all the internet traffic goes through. Like I'm sure the government can do stuff against it. Now you listen, people a lot smarter than me come up with lots of reasons why I'm wrong, and I have no interest in debating them. I'm just an old fart that doesn't like it, and I'm going to stick with my gold. And I have no hair, and what hair I have is gray, so that probably just says it all.
All right.
Although it didn't stop Mike Novogratz from doing it, did it? Like he has no hair just like me, and he's a little more progressive than I am.
And it sounds like he's probably sitting on a greater pile of crypto wealth at this point in time.
That's right.
But the last question on this, which is the geopolitical reasons for central banks, particularly ones like China, to load up on gold. I don't get the sense that you feel that same dynamic is pushing those same players to, for some reason, favor or get into Bitcoin/crypto.
I'd be surprised if the Bank of China was buying crypto, and I could be wrong. Listen, you know what? I think that people need to remember that one of the things about a trader is that you need to make sure that you understand that you're going to be wrong all the time. I saw Anthony Bourdain has a tattoo on his arm that says an ancient group. I am certain of nothing. I think Anthony Bourdain would have been a great trader. And I'm the same way. I am certain of nothing. So do I believe that Bank of Japan or Bank of China is going to be buying crypto? No. But, anything can happen, and
Is that a
maybe
little
I'll
bit
be
of a
proven
brag
wrong.
there?
Okay, wouldn't shock you, but not part of your thesis, and that's
Yeah.
really all I wanted to
I
clarify.
think Anthony
Okay,
would
well, look, I just
trader.
mentioned, the
And then he's
Fed's
like, "Oh, and
recent
I'm the same way."
move, potentially adding, was certainly adding wind sales to the markets, but maybe adding special wind to the sales of assets like gold. I'm curious, lots of ink being spilled about this right now. A lot of people calling it the Fed pivot. Obviously, the market has taken the football and running with it.
Yep.
Do you see it as a pivot?
Oh, yes, for sure it was a pivot. Like, let's step back and think about September 20th. It wasn't that long ago. At that point, the Fed was raising 12 and a half bips a meeting, meaning that they were definitely on a schedule of one hike every second meeting. And if you think about their evolution of tightening, it started off with, like, I think the first one was 25, then they did a 50, then they did some 75s, and then they went down to 50, then they went and did some 25s. And as they got closer and closer to their target, they reduced the pace of tightening. And I think that, Powell talks about it. He was feeling around, trying to figure out the point where they were sufficiently restrictive. And as they got closer, they slowed down the pace of tightening. So September 20th, the market was thinking that they had stopped, and they came out and they actually very clearly said, nope, we're still not there. We think we're close, but we're not there. And if you think about back then, I'm just looking at my notes here. I think September 20th, the US 30-year was 442. Then a month later was 5.5. The market was caught off guard about how hawkish the Fed was still at that point. So what we did was we had a huge tightening of financial conditions from September 20th all the way to like the end of October. And at that point, the Fed, we hit this level where we kind of hit the pain point for the Fed. And they came out and they said, there was, in essence, they said, the tightening of financial conditions has done the work for us. We don't need to tighten anymore, so we're going to pivot. So that was the first pivot they did. They said, looks like we've hit sufficiently restrictive, and we've hit that because we've had this tightening of financial conditions.
Hey, can I ask a question about that?
Yeah,
Just
sure.
So you answer as you keep going on here?
Yep.
That surprised a lot of people because there's a lot of financial conditions indexes that have been rising all year.
Rising in terms of getting easier.
Loosening all year.
Yeah,
so
but I think
people
most
are
of them at that point, from that kind of September 20th till October 30th period, were tightening.
Okay, that's right. As the markets were
right, because we had that huge crush in the long end of the bond market, right? Like the bond market just went no bid. And let's think back to that period. Everyone's forgetting about it now, but there was all sorts of talk about, term premium. People that don't really even understood what the word was were, lecturing folks about how the Federal Reserve wasn't going to be able to fund it, the Treasury wasn't going to be able to fund the U.S. government because the bonds were going to go no bid. The term premium wasn't wide enough, and all this stuff. And Adam, listen, you can go back and look. I've written for Bloomberg for a couple of years now, and I wrote pieces a couple of years ago about how the bond market was a disaster waiting to happen. And at that time, I got told I didn't understand the bond market. There was lots of people have predicted kind of a bond bear market, and lots of people have gotten crushed. And, I kind of think back to the pushback that I got when I was bearish of bonds a couple of years ago. Well, in October, I got bullish of bonds. I said, listen, this thing's gone a long way. We're now at a point where the term premium is actually positive. We have just sentiment off the charts bearish. And it was kind of just ironic how when I got a little bit bullish at 5%, I got told that I didn't understand the problems with the U.S. government, and that we are not, like, the bonds were going to head to 6, 7, 8%. And here we are, things gone from 5% down to 4% in the space of a month. And that was largely a function of the Powell pivot. So that was the first pivot. But what was really interesting was that as financial conditions loosened, right, we had a situation where they pivot, all of a sudden financial conditions loosen, we get to the point where we're actually looser, than we were when they first worried about it. Okay. And most people at that point, and me included, expected the Federal Reserve to say, hey, wait, you know what, guys?
I think I see what he's saying there is like if financial conditions are tight when inflation expectations are, 5%, and they remain the same, like financial conditions remain the same when inflation expectations are 2%, then you're actually tighter because inflation expectations are lower, so there's not enough need to be as tight. So you're tighter by nature of the expectations being lower, which is kind of a mind fuck, but I kind of get what he's saying there.
Like we've eased enough. We're going to be on hold. Everything is fine. There's it's time to be. They didn't want to goose it anymore. They would push back on the easing of the financial conditions, is what most people expected, like
Right.
a couple of weeks ago.
I would put myself in that camp.
Yeah, I was too. But then I very quickly, you know what? There was a couple of instances where Powell was given a chance to push back on that,
What was he doing?
and he didn't take it.
Do you really
And at
think
that
was
point,
gonna
I
work
was
out
like,
for him?
oh, wow, look at this. Here it is. They just served him up this softball, and he didn't take it. And he did not push back on the, the easing of financial conditions. So I would argue that the recent Fed move, when actually at the FOMC meeting, shouldn't have been as much a surprise as it was. But ultimately, too many people, fell for this idea that Powell is not going to be the next Arthur Burns. He's going to be the next Volcker.
Right.
And I'm going to give you my theory. And here you go. You were talking about conspiracy theories and stuff like that. I will
long
gladly
is that
jump into
little
this
fucking goose thing he's
conspiracy
got?
theory. And I truly believe that Trump is scaring the establishment, and that although I don't think it's as overt as Powell saying, I don't want Trump to get elected, so therefore I'm going to ease, at the margin, he has changed the equation of the risk reward in terms of how Powell sees the
I'm
money.
not very focused.
So everyone said to me, but Powell doesn't want to be the
ended
next
my own
Arthur
life drain
Burns.
there.
And
Like,
I
I
said,
was
no, you're
healing myself,
framing
and
it
then I
wrong.
just stopped it
If
'cause
you
I
go
accidentally
back and
double-clicked.
look over history, for the past 100 years, no president that has had a recession during the election year has won. I think the last one was Calvin Coolidge in 1924. So when you're thinking about Powell, he can go and raise rates and push the economy into a recession to get inflation down from 3 down to 2%, like all you guys think he's going to do. That's one option. Another option is he says, you know what? We're pretty close. I don't want to be the one pushing the economy into the recession. I'm going to ease up. And I truly believe that when he looked at the kind of risk reward, he's willing to accept a little more inflation at the, he's willing to accept the chance of a little more inflation for the possibility of maybe averting a recession.
Okay, so averting a recession, okay, I can believe that. But you mentioned Trump earlier. Is his desire to avert the recession and take on a little bit more inflation risk, to your point, because he wants things to remain rosy enough
was
that
dude doing?
the current administration gets reelected and keeps
really-
Trump
I
out?
going
don't.
to
So
my
I don't think it's the
games,
current administration. I don't think that he cares if it's Biden or if it was, let's say, Nikki Haley. And I think that if Nikki Haley was the GOP nominee, then he wouldn't have been as easy as he currently is. I think that Trump, whether and I listen, I am
Where's
not
our
making
fucking Medivh,
any
dude?
sort of political
I was like,
opinion
eventually he'll
about
come
what
over here
should
and
be
give me a
done.
portal so I can
I'm more
get
interested in
away.
what will be done, and I'm just trying to read the tea leaves as I see them. And I do believe that Powell and a lot of the political establishment don't want Trump to win. They view him as a risk to the government.
And Trump said, I get reelected, I'm booting Powell from office. So Powell already kind of knows his job's at risk
Yes.
there. And again, yes, folks, this is a completely nonpartisan conversation we're having here.
Yeah.
We're just trying to understand, the mechanics of what may happen. So help me understand, how does recession equal Trump versus recession equal Nikki Haley, or
Well, Nikki Haley, what I was saying is right now Trump is the leading contender
Yeah,
for
he's
the
leading
GOP.
everybody, yeah.
Right. So what I'm saying is you'd have to assume for now that he's going to win the nominee. So he's going to be the Republican nominee, and therefore a recession, as I mentioned, there hasn't been a president that's presided over a recession and has won since 1924. So if we assume that Trump wins the GOP nominee and then we have a recession, everyone's like, get Biden out of there, his economy stinks, and all of a sudden Trump's the kind of next president.
Right. So again, and I'm just trying to understand like the mechanics that Powell has to help engineer this. So as long as Trump's the front runner, we go into recession. History shows that Trump should win. Biden's out. And so I get that. Now, if Trump started losing in the polls and you had somebody else on the Republican ticket start, gaining a comfortable lead on him, do you think Powell might change?
I think at the margin, Powell would change. And I don't think it's as overt as everyone thinks it is. Like he's sitting around in Machiavellian thinking it out. I just think when he's thinking about the risk reward of the different choices, he's like, oh, geez, like I could go and I could be really tough on the economy right now, and I could push us into a recession to try to get that last 100 basis points out of inflation. And then I'll be the guy, instead of being Arthur Burns, I'm going to be the guy that handed Trump the victory. Right. And that's how he's thinking about it. So at the margin, he's always kind of trying to weigh pluses and minuses.
Like
and so if you're asking like if Nikki Haley all of a sudden wins, then yes, I think at the margin, Powell will become, slightly more hawkish. It won't be like all of a sudden, like we were pricing 6 and now we're going to do 0 because Nikki Haley is there. It's just at the margin when they're trying to decide the balance of risks, that equation will change.
Okay. All right. Well, look, there's been a lot of, I want to ask your opinion.
Adam, can I talk before we talk about the Fed? One last thing about, I think another part that people miss is that that too often they're talking about inflation kind of in a rear view, like looking at it in the rear view. So they're thinking about right now, they're saying inflation is whatever it was, 3 and 30 or whatever it is, instead of thinking about what inflation is going forward. And if you think about John Williams, who's the New York Fed president, he spoke about this. He said, really what you need to be doing is looking, when you're setting policy, you set policy based upon what future inflation is expected to be.
Like 10,
so if we look at the
to
1 year inflation swap,
so that
meaning the rate that the market thinks the next year, the rate of inflation over the kind of forward 1 year, it actually had declined from 265 down to 2%. So when Powell went and in essence in this last meeting, and not only did he not push back against the easing of financial conditions, he seemed to endorse rate cuts in the next year. What he was in essence doing was looking at what inflation has done and looking at the real rate. So if you look at the 1 year kind of treasury rate, you'll see that it has kind of fallen from 5.5 down to 4.93. So it's declined almost 60 basis points. And so everyone says, look at how much he's eased financial conditions.
Even though
but in some ways, in their mind, inflation is their policy rate is just as restrictive today as it was 3 months ago, because the real rate, meaning the rate above future inflation, is the same. See what I'm saying? If you're thinking about forward inflation, if you're setting policy based upon forward inflation, as inflation falls, as the expectation of inflation falls, you can lower the nominal rate without actually loosening policy.
Right. Okay. Yep.
That is what they believe. Whether you believe it or not doesn't really matter. Like, because don't forget, it doesn't matter what we think is right. It matters what we think, understanding what they believe. And so to some extent, they don't view this last kind of easing and putting those cuts in as easy as we think it is.
As big a policy shift as the markets are taking. Okay,
That's correct.
So
Dynamic,
Kevin, I mean, we could talk for 5 hours on this. This is wonderful. I'm gonna jettison the question I was going to ask you on the Fed, because we got enough of that out of there. But you're opening really other interesting doors. We're getting a little tight on time, so I want to make sure we get enough of your market outlook in here. So, sounds like you think that market participants are their future inflation expectations are coming down, right? That should be good for bonds, right?
Yes.
Especially if Powell continues to cut rates, and if we ever even go back to QE, that should be really good for bonds too. So we're at a moment in time where this year equities have gone from richly priced to very richly priced to becoming even more so as you and I speak here, basically. When you look at stocks relative to bonds, the equity risk premium, it's kind of at one of its worst levels versus bonds in like decades, right?
Yep.
So are you expecting bonds to do very well next year? And if so, well, let's talk about bonds first, and then we'll talk about your stocks outlook.
Well, the trouble about the bond market is that it's gone so fast, and that when we were talking, it was 5% on the 30 or 5.25 on the 30-year. We're now down to 4, and it's moving so fast and it's difficult. And that's part of the reason that stocks have rallied so hard, is because the bond market has rallied so hard. They've been kind of tied at the hip. But if I kind of think about, step back and take a bigger picture look at things, and I think about the NASDAQ 100, and I think about it back in March of 2020, when everyone was convinced the world was going to end and that the stock market was never going to go up again, I think that the NASDAQ 100 had an earnings yield of 5.5%, and meanwhile the 30-year was 1.5 or 1 or something like that. So the difference between locking in your money and giving it to the government versus going out and buying stocks was huge. Now fast forward to kind of in October, especially when rates went back up to 5%, the earnings yield on the NASDAQ I think was 4.5. And so when I think about the kind of changes that will occur in a lot of
I've always said, for getting those votes at the end like that, you should get some extra gold or something. See if Arbs wants to get a couple games in. If not, after a little bit, I might play some casual, like 2v2s or something in StarCraft. Wait. Wrong scene.
Financial committees coming the new year, they're going to start to look at their makeup of their portfolios and say, hey, you know what? We're long stocks. It's been a great run. But relative to bonds, we can now lock in some great levels. And I think Howard Marks from Oaktree was talking about this, how you go out, you start buying a little bit of high yield, you can all of a sudden hit your 8% return by buying a fixed income, security as opposed to a stock. Stocks over the long run are expected to yield perform 8 to 12%, but stocks are stories and bonds are contracts. And a lot of these bonds now, all of a sudden, we have a situation where you can actually lock in yields and lock in funding. And I think there's going to be a shift. And I think that that's going to be something that the market misses as well, is that the big long-term money, I'm talking about like the CalPERS and the Yales and all those kind of things, they're going to look at this and they're going to rejigger their portfolio from, owning, stuff full of equities, and they're going to start at the margin buying bonds. So I ultimately am not a huge bond fan, but I do think that relative to stocks, they're attractive.
So a couple questions on this. One is, how material will the capital flows be out of stocks into bonds? Enough to actually challenge stock market valuations, or?
Yes, for sure.
Yeah,
I think at the margin, we're going to start to see more selling in stocks, and we're going to see more buying in bonds. And I think we're going to be surprised at that the performance between those two changes. The equity
Okay.
risk premium, as you mentioned, is at levels that dictate that that's the smart, prudent thing to do. Right now, stocks are running and everyone's all excited about it. But the kind of the longer term, more patient money that thinks about things in the bigger picture will be doing this trade.
Gouldy and an
selling the
ARAM?
stocks
Oh,
when they're
hell yeah.
expensive.
That guy can be Deckard. That guy
Okay,
can be
so
into it.
I had
ain't
a
playing
bond
heels.
analyst, Alf Pecatiello, on the program not that long ago. He also runs a pretty successful
I get
Substack.
Gouldy and ARAM like once every 350 games. So
But Alf makes a very similar predictions that the bond whales, who have been on a relative basis, buying a lot less in recent years, are now going to move in for a lot of the reasons that you just talked about.
Yep.
One additional reason he mentioned, and I just found this chart here I want to pull up, I just want to get your thoughts on it, was the correlation that stocks and bonds have. That his analysis shows that at a high enough level of inflation, bonds and stocks no longer become inversely correlated.
Right.
And so we've been in this high inflation, period where bonds weren't giving
Cheeky
you
little
the
ARAM, and I
counterbalance
got
that you
gold
wanted
AM.
them, right?
Hell
And
yeah.
and now that inflation is coming down and expected to come down further in the future, these guys are saying, hey, I can lock in those tasty returns, but I can also now finally
Tasty
get that negative
returns.
correlation to diversify the way that I want to. So it's another reason for these whales to be, buying into this market. Do you agree with that?
Well, no. So I'm in a slightly different camp. And part of the reason that I'm hesitant to get too bullish on bonds is that ultimately I am a believer that we are going to have more inflation. And I am a believer that this economy will likely be run hotter. And everyone's all excited about the fact that Federal Reserve has just pivoted dovishly. But if you think about it as a long-term bond investor, it's actually the worst thing that can happen to you. Everyone thinks that they want, the Fed to loosen rates to be bond positive. Yes, you want that over the short run. Over the long run, the Fed has just told you that they're willing to accept more inflation.
Right.
They're willing to risk more inflation. And as a long bond investor, assuming no default, that is actually what is your ultimate
Yeah,
enemy.
makes
And
sense.
so, over the
They're willing
long
to accept
run, I
inflation.
believe that
That
we're going to
means
get
your
more
yield
inflation, and
needs to be
therefore
higher,
bonds are not a
so
great
that it's
investment. So
above
when I'm
inflation.
talking about the shift, I'm expecting more of a shift kind of into corporate bonds, more things of that nature. And I suspect the government bonds, especially at the long end, will be surprisingly weak going forward. And I think that they're not the greatest investment. But I do find it interesting that you're bringing up the stock bond correlation, because when I think about the biggest challenges facing investors kind of going forward, I think that flipping of the stock bond correlation is the number one most kind of difficult thing for them to deal with. And so what do I mean by that? So if you think about most
Sorry, them being the Fed, them being who?
Get away
no
from me.
investors, that is the
Okay.
most difficult
That's
thing for
probably one of my
like we
biggest
can
pet
talk about
peeves
the
in
Fed.
this
The Fed
game
doesn't
is
really
when people
control
don't
the long
realize
end; they
they
control the
get
short end.
living bomb and they keep, like,
But if we
bombing
think
you
about
and
investors
spreading
and,
it to their
and kind of
teammates.
what the last 40 years, we've had just this great environment where bonds have been negatively correlated to stocks, okay, and they've also been in a huge secular bull market. Up until 2020, it was just the greatest of all worlds, because rates went from 18% in 1982 down to zero basically.
get 'em
until
40-year uninterrupted tailwinds. Yeah.
yeah, and not only that, the fact that the bonds and stocks were negatively correlated was so important, because in essence that meant that you could lever up your portfolio, because at a time when your volatile asset was doing badly, you could count on your non-volatile asset, the bonds, to perform better. So, Ray Dalio became the richest hedge fund manager of all time by taking advantage of that and
Get away from me, dude.
instituting risk
Trying
parity.
to get away from you. Trying
So
not to
when
bomb
we
you,
have
you're
this
running it.
situation where in the last couple of years that kind of correlation is broke down, and not only is it broke down, it's actually flipped. That was why we had a situation where the 60-40 had two of the worst years that they've ever had, because the bonds and the stocks were going down at the same time. And one of my lines that I've always used, Adam, is I've always said, be careful about bonds. Everyone expects them to be a ballast in your portfolio. I think they're going to turn into the anchor. And ultimately, I do believe that is still going to continue. And so especially the long end. So when I say bonds, like back to the equity risk premium, I'm thinking more you replace it with like 5-year
Dos
corporate bonds and
globes.
things of that nature, as opposed to going out and buying long dated bonds. Because ultimately, I think this move is most likely done on the long end, although I could see a situation where the Fed
That you
lowers
got
rates, but I
deleted.
could see the Fed lowering rates, yet the long bond actually rising in yield as investors become increasingly uncertain that the Fed is committed to their 2% target as much
To their
as
inflation
they
target.
is.
Okay, so just to be fair to Alf, his outlook is, tailwind for bonds for 2024, but then he expects there to be secularly higher inflation going forward. So, it's sort of a shorter term outlook, and then you want to get out of
Okay,
it.
yep.
I'm curious where you're saying
Venus,
is
'cause
do you
the
even
anus.
expect much more of a continued downtrend here, or do you think people are going to start worrying about inflation sooner than most people?
Oh, I think we're almost at the end of the bond bull market that we've experienced in terms of this correction. Like we were in a bond bear market, and we've had this correction at the Fed pivot, and especially at the long end, I think the long end is going to struggle from here. Like, let's just stop and think about what happens when the Fed goes and actually eases. Usually the Fed eases, and what happens is the bond market steepens, the yield curve steepens, meaning that the long end and the short end, the difference between the two rises.
And usually
So,
the short end goes down, but
yeah, so if we get a situation where the Fed, like, you have to ask yourself, what do you think is going to be the new lower limit of the Federal Reserve rate? Like, where is the Fed going to stop? And if you believe that we are back into the environment of the post-GFC, pre-COVID era, where interest rates are going to zero at the front end, and we're going to be, stuck with very little growth, then for sure you should go out and buy bonds. But if you believe, like I do, that the fiscal stimulus will continue, and that even when we get a situation where all of a sudden the economy does bad, we will see more spending, and I think we'll see increased inflation going forward, I could see a situation where the Fed really, the new kind of lower level is 2%. So if you go to 2% and you think about the fact that in a normal yield curve, at that point when they're the kind of the most easing, you get a 250 basis points between 2s and 10s. That means 10 should be 4.5%. And so I suspect that from here, you're going to be the long end will be a wash. You'll be hard pressed to kind of do more than earn your coupon, I think, from here.
Okay, let me just bring up this one chart for a second, just to get your reaction to it, which is, this is the chart that shows the federal funds rate, prior to each recession that we've had over the past 30 plus years. The recession's been preceded by a pretty aggressive run up in rates. Then we peak, we plateau for a little bit, and then rates plummet as the Fed basically is chasing the economy down, saying, oh gosh, I over tightened, I got a stimulus here. What I hear you sort of saying is this time might be different because of this new normal we're in. Is that true? Well, we're talking about this new normal, so I mean,
I wouldn't say it's a new normal. I would say it's the shift from monetary. Lynn Alden came up with this. The shift from monetary dominance to fiscal dominance. And I believe that that's what you're going to experience, is that it's changed the playbook. So remember when I mentioned how the peaks were always lower? Can you put the chart up again?
Oh yeah, absolutely. Sorry about that.
Sorry, I didn't mean that. I want to show something here because I think it illustrates what I say. So if you look in 1987, that peak was 12, and then we lowered rates to 3. Okay, and then on a subsequent rise up, we went to 6.5, 7, and then we lowered rates lowered rates to 1. Then we went up and we went to 5, blah, blah, blah. And so each time now, think back, we forget now, but there was lots of people saying when we would hit 2%, they were saying the economy was going to roll over.
Yeah.
Like
I interviewed a lot of them. Yeah.
Oh, yeah. There was tons, like Goldman Sachs, a lot of people. And the thing that going back, what did they miss? They missed the fact that there's fiscal. So if you could tell me that tomorrow we're going to get a government that is going to try to balance the budget, is going to stop spending, and is going to rein in everything, then I would tell you I would completely change all my outlooks. I would say, in that
That ain't gonna
environment,
happen.
we're going to see a situation where we very well could go back to the
Politicians
lows and we go
wanna
back
get
to
elected.
0%, and we have a
So
return
being
to that old
smart
thing.
or
But I
doing
don't believe that's
anything
going to
in terms
happen.
of austerity
Like as you
isn't
you
gonna
know your
happen.
great analogy about the bear tasting meat. I think that we're going to be surprised at how much politicians find excuses to go and to keep spending. And ultimately, I think it was Bill Fleckenstein that came up with this. He says the governments are going to keep spending until the bond market takes away the keys.
Hell yeah.
Yeah.
And
Take away the
I
printing
think-
press.
Yeah, and that's a great line, and I think that he's probably on something. And so I'm just hesitant to go and get too bullish on bonds or to get too bearish on the economy, because
Saved me twice
ultimately,
now.
if the government steps in and spends, the one lesson
What
we
an
should be
absolute
taking
unit.
from the COVID example is the fact is that the government can go and can fill an economic hole way better than anyone imagined. And that's kind of the real lesson, right? If the government spends, they can affect the economy. Now, we can argue about whether over the long run that's going to cause pain or whether that's going to cause the economy to be as efficient as it should be. And I have no desire to debate that, because I don't know, but I don't even think it matters, because the reality is that we're not trading over we're not putting on our portfolios for the next 30 years and forgetting about them. We're putting it on for the next 3,
The
5
W
years.
build's kind of nasty.
And over that
honestly.
period, I contend that I think that the government will continue to spend.
Okay, well, so in wrapping this up here, I want to get to your kind of market outlook, and you can put whatever term you want on it, the next 3 years, the next 12 months, whatever you feel comfortable with, next 3 months. But what do you think is more likely to happen? This is not, a guarantee. This is just your best assessment. And what assets are you looking at right now as good ones to consider for that type of environment?
So we haven't talked a lot about the Mag 7, but the reality is that everyone's expected a recession. And just to go show you how difficult this game is that we all play, is that if you go back to the beginning of 2023 and everyone was expecting higher rates, and the overwhelming consensus was that was going to hurt long duration assets like tech stocks. And I was the first one to agree with that, and I thought that was the case as well. And what's happened is the
Wow.
Mag 7 is just taken off, and for a variety of reasons. They borrowed long, they have all sorts of cash at the short end. We had an AI kind of an extra alpha boost from the AI kind of bull market. But increasingly, we have a situation where those 7 stocks have dominated like the zeitgeist, and everyone's bought them so hard that a lot of the other stuff is cheap. It is really cheap. Like, you go look at small caps versus large cap are one of the cheapest PE, forward PE kind of differences that we've seen in years.
I've been saying that for a while. That you'd
go
think
look at
small caps would start to
foreign
outperform
assets
if
like
we're
other
really not
other
in a
countries. Now, a
bear
lot of this has
market anymore.
changed ever since the Powell pivot, because a lot of these things have just run up.
Right.
But and the reason they've run up so hard is because there was so much crowding in those names, meaning
Right.
that everyone was long the Mag 7 and they were underweight / short everything else. And when I look at the kind of investing horizon and think about it, I really think there's continuing to be opportunities in those other names and those other kind of asset classes, like whether it be value, whether it be small cap, whether it be foreign stocks. I think that a lot of those things were held back by Powell keeping his foot on the throat of the economy. And at the very least, even if he didn't do it, there was always worry that he would. And I suspect as that changes, the nature of what works within the market will vary tremendously.
GG.
And I just want to leave you
We
with
should be
something
getting
here
the
in terms
W
of the
here.
NASDAQ. The NASDAQ goes up 55%. The S&P this year, the S&P's up 26, but the S&P equal weight up 13.5%.
Yeah.
It's not that good. It really isn't. The Mag
Well,
7,
like what, a month and a half ago, it was up nothing.
yeah, it was 0. The Mag 7's up 110. And one of the things that everyone always talks about, I find retail investors always think that institutional investors are so much smarter and they have so many more options, and they're at such an advantage. And I always tell them, no, in essence, you guys are the ones at the advantage. First of all, you can get in and out really quickly. You don't move markets. Like a big institutional investor takes days, weeks, sometimes months to buy and sell stock.
Super slow.
Yeah. But most importantly, they don't have the ability to sit through
Andy had two
career
excellent
risk
polls on
kind
me
of
that game.
underperformance.
I'm definitely going to upvote that Andy.
So,
Where's he at? There he is.
An institutional investor can't have the Mag 7 going up 108% and not participate. And a retail investor can just say, hey, wait, these are good stocks, but at this point, that makes no sense to chase those.
Too rich for my blood,
Yeah, I don't have to do it. And so I really think that retail investors should think long and hard about taking advantage of the kind of career risk chasing that institutional investors must do. One of the perfect examples of this, Adam, is that over the long run, there's been all sorts of studies about how equal weight outperforms market cap weight over time. It's just, you can go look at it. I think AQR has written about it. The other research shop has written about it. There's tons of studies out there that over time, equal weight wins over market cap weight. And the reason that that not everyone invests in it, first of all, if you're CalPERS or one of those big guys, you can't invest in it because the liquidity of you trying to buy.
It's hard to see what he's saying there. I'm sure he'll suss it out here, but like if you look at equal weight right now, it's up like 10% and inflation adjusted up like 8%. But if you look at like the standard S&P, it's up like 20% from its lows, you know, like over the last year, because the lows were in October of 22. So we've been pretty much going up all year.
Buy an equal amount of Apple and an equal amount of the 500 stock makes it so it just doesn't work. But even more important,
I'm not
than
very good on
is
Mouth,
you
but
can't
I'll give him a
take
shot.
the 1,
I remember
2,
back in the day
3,
when Mouth was
5 years of
dirty.
underperformance that
Fingertips
we're
are cold.
kind of experiencing.
Right.
And
And
that's
sorry to
what-
interrupt, but you also, I think, get the punishment or reversion to the mean, right? Where you have to chase into it because it was up 100% this year. You have to own it. Given the fact that it had an outlying year, the odds of it having an underperforming year are not bad, given reversion to the mean.
Right, because if
Yeah.
you think about the equal weight right now, what is the equal weight going to do? They're going to be selling at the end of the year or whenever it rebalances. They're going to be selling their Mag 7, right? Because they owned it at equal weight. It was all equal weight, and they've all doubled.
Right.
Now they got to put everything else equal weight. So they're going to be selling their Mag 7, and they're going to be buying the stocks that underperformed or were actually down. And so long and short of it is that as a retail investor, you should really go look at taking advantage of kind of those constraints that professional investors are
14
under.
mana? Is that actually
And
what I want?
when I'm thinking about it, we have a situation
We
where
got pretty good damage.
this is extreme, meaning that those 7
Take this
stocks
one.
have done so well
See most people go
versus
with
the
tenant
rest of
one,
the
but-
market. And one of the problems I have whenever someone asks me about the market, I'm like, well, like I'm pretty bearish those 7 stocks. I don't see how like they're going to have difficulty growing into that. You know, you just have to go back and look at the Nifty 50 in the 1970s. A lot of those companies ended up being absolutely terrific companies that did everything from a fundamental perspective that the kind of the bulls thought they would do. But in terms of investments, they were terrible investments. They went nowhere and they just kind of dripped for the next decade. And I kind of expect that's what's going to happen with these Nifty 50s. And so when I'm thinking about what I'm looking at kind of going forward, never before have I felt so strongly that you should look at not being in the market cap big name stocks, and you should really think about if you're kind of benchmarked to the S&P 500, you should be really aware of what you own and how much risk you're taking in those 7 names.
So if I understand how
Wow.
to play
Okay, that's a bold
the
statement.
current
Declarative statement. Never before.
Mouth correctly,
Never
you
before,
wanna
what do you
keep
mean?
your queue on as many
Oh,
people
I thought you
as
said
possible.
never before. Have you seen? Have you been sort of this concerned about the differential between the market weight?
So I'll tell you, the only time I've ever been this worried about it was I'm a Canadian, and we had a situation in Canada where Bell Nortel was our biggest stock, and Bell owned a big chunk of Nortel, and our index actually became 45% of the TSC 300. And it was terrible. It was terrible for active managers because think about it from a fiduciary point of view, they actually couldn't own 45%. Like, it made absolutely no sense. So as this stock was rallying so hard, everyone was underperforming. And these things, I would be shocked if we have a situation where the Mag 7 is able to continue this level of outperformance. And I really suspect that as we kind of go through year end and a lot of these kind of finance committees meet and think about their portfolio and they look at it, they're gonna be like trimming this thing. And so I suspect that it'll be for sale for a long time. And I not only that, Adam, like one of the things is they've actually no longer are the leaders. Like, think about this rally of the last little while. Like, what did you want to own? Like the Mag 7, sure, they're up, but they're not up as much as the rest of it.
Right.
Like, you know, and so you buy the stuff that's the new leader. And I don't think the Mag 7 is going to be the leader like it was last year.
All right. Well, you're in good company too. A few weeks back, I interviewed Fred Hickey of the High Tech Strategy.
Oh yeah, great guy.
He says he's about as bearish on the Mag 7 as he's been in over much of his career. So, so it's good company to be in. All right. Well, look, this has been fantastic, and I love this point about the advantage of the equal weight index as being an advantage for the small guy. The whole mission of this channel, Kevin, is to help the small guy gain whatever edge they can against the power brokers who have had a lot of the advantage on Wall Street and have slanted the playing field to their advantage. So whenever we can find an opportunity here, it's awesome to be able to highlight that for folks. So thank you for doing that.
Oh, my pleasure.
Just from my notes, I heard, hey, look at small caps, look at emerging markets, look at corporate bonds, at least for the short term, looking out 5-year duration-ish or so. You like gold, you encourage people to look at equal weight indices, and you're cautious about the Mag 7. 2 last questions for you.
Sure.
First one, very important for folks that have really enjoyed this conversation, Kevin. Maybe this is the first time they've gotten exposure to your work or seen you live. Where can they go to follow you in your work?
They go to themacrotourist.com, and if you want to see some of the old pieces, just send me an email, kevin@themacrotourist.com, and I'm happy to send you off some of the recent pieces.
All right, that's very kind of you and very courageous of you to share your email address there. And when I edit this, Kevin, I will put those up on the screen so folks know exactly where to go. Folks, I'll have links in the description too, so you can just have one-click access if you want to. All right, the second question I'm going to ask you right after I do just a little bit of housekeeping, so you can think about it, Kevin, is we've just spent the past hour plus talking all about ways in which we hopefully can, improve our financial wealth prospects from here. What's an investment that you would encourage somebody to consider adopting in their life that's not financially related? I've been asking this question of late and getting some really interesting answers. Would love to hear your thoughts. As you think about that, 2 things. Folks, if you've really enjoyed having Kevin come on the program, half as much as I have, this has been a joy for me, and would like to encourage him to come back on again, hopefully at some point early in 2024 to kind of give us an audible call on how he sees things. Let us know by hitting the like button, then clicking on the red subscribe button below, as well as that little bell icon right next to it. And just a reminder, just as Kevin has his Substack, which you should totally go out and check, and I think if they go to macrotourist.com, Kevin, they can find their way to your Substack from there?
That's correct, yep.
Okay, great. I have my new Substack that's out there. It's adamtaggart.substack.com. I provide a lot of free information on everything that's going on in this new thoughtful money movement. But I have also resumed my Adams Notes, which are my cliff notes for my key takeaways from these interviews, including this one with Kevin. And so if you want to get those Adams Notes, go to the Substack, subscribe for the premium service. You'll get it as part of the premium benefits. And just a quick reminder, it's very inexpensive right now. It's like $8 a month. That price is going up at the end of the month. And so if you're thinking about becoming premium, do so quickly because you can get grandfathered in at that low price, and as long as you remain subscribed going forward, you will keep that low price.
I'm dead.
Anyways, want to folks know about that. Kevin, we're here at the end with this final question here. What's a non-financial, non-money related investment you think folks would be wise to consider?
Yeah, I got 2 answers. I'm going to go with the cheesy one first. Life is short. Make sure you spend time with the family. Make sure you spend time with the kids.
Mouth is kind of a little bit hard to play. Make sure you're not spending
too much time staring at the screens
especially
and giving people your attention. You'll turn around. Next thing you'll know, I'm 53 years old. My kids are moving out of the house, and I'm kind of I'm happy for all the time I got to spend with them, but there's lots of times that I wish I'd kind of been more aware, more present, spending time not worrying about what the next tick in the S&P was going to be, and spending time like learning and listening to them. That's the cheesy answer. The other one is that we all know we have to keep learning. One of the things that I think that as traders / investors is you need to keep expanding your tools. And I think that especially the young people that are coming up and trying to figure out how they get into this industry, work on your programming, work on your Python, work on your R, like work on.
That's crazy that you're
learning a
saying that, because
computer
I just started
And it
doing a
doesn't- you
Python
don't need
course
to
not
be
long ago.
The next Bill Gates or
I'm thinking about
whoever
streaming
that's
some of it.
programming really fancy stuff, but these are the increasingly are becoming the tools.
Hell, I'm only like
upon
one
which
lesson
we
in.
all
I could go
use,
back and stream it from the
and
beginning.
that's going to
honestly.
really differentiate your ability to understand and find kind of anomalies, find and understand the markets better. So anyways, work on your programming, R and Python.
Wow, those are both great. So for the second one, really kind of learn the fundamental language that, you know, the future of business and the skills required to succeed. You know, learn what that fundamental language is.
Yeah.
And I got to say on the other one about spending time, life is short. You're putting a dagger in my heart for two reasons. One, my youngest is a senior in high school this year.
Okay.
So, you know, we're staring at the empty nest coming up. And so I lament that, you know, fear of yours all the time. And it's been a really busy year for me. You know, I've been running in startup mode forever, but recently just started Alpha Money even more. So I'm even more like heads down on what I'm doing. And it just kills me when, like, you know, end of the day I stand up and I've finally done the last email or whatever, and then, you know, she's already off to bed or whatever, and I feel like,
Right.
like one more day, right? And tied to that, as you and I were talking before we put the camera on, as folks know, I think most folks know, my father passed away this past weekend. And yes, you know, it's a reminder that life is short, and, you know, we always never get as much time as we want. And I will say, I'll probably have already talked about this in the weekly market recap at Lance, but like, my dad was, you know, he's an older guy, he's 89, right? He was a man of few words. And there were a lot left unsaid. And I sort of always thought that, like, oh, as his life was, as you could kind of see the end of his life coming, I sort of thought that, oh, maybe, you know, he'll be in a place where we can have some of those conversations. But this all just happened so quickly that, you know, he was fine one week and then he was gone the next. So just never happened, right? And so just don't assume you're going to get that chance. Like, you know, make the time now, as you're saying.
Well, Adam, and I'll just say this, I'm sure everyone's listening and will share my sentiments when I say we're sorry for your loss.
Oh, you're super kind. Thank you, Kevin. Anyways, just makes me like you even more after this wonderful hour that we've spent together. Thanks so much, Kevin. Like I said, I really hope to be able to get you back on this program whenever you want to come back on.
I had a great time.
This platform's here for you. Everybody else, if you are still hungry for additional content after watching this one, I just finished, Kevin mentioned that he has written in the past for Bloomberg. I just recorded an interview with Simon White from Bloomberg. Great analyst. I like Kevin, had never met him before. Really enjoyed that conversation. I'll put up a link to that right here if you're hungry for more. But other than that, Kevin, it's been a pleasure. Everybody else, thanks so much for watching.
Thanks, everyone.
Why do you keep getting Imp? Like, he's a bruiser. You should be trying to get Brightwing or Chromie or
Whatever you do it for less at Harbor Freight.
Very good.
Got a special episode today. I am speaking with Carson Block, the activist short seller of Muddy Waters Research. Carson, great to have you here. Welcome back.
Thanks, Jack. Good to be here.
It's my pleasure, Carson. So you publish under Muddy Waters Research, and you also have a fund, Muddy Waters Capital, where you invest alongside that. I am really glad you're here to discuss your most recent public short, which is of the Blackstone Mortgage Trust, BXMT. And this is a mortgage trust, so it makes money by owning loans and then funding those loans by paying a little bit less. So like a bank, it harvests that spread, but it's not a bank. Before I ask you what drew you to short in this
I'm
space,
impressed.
That
can
was
you just
pretty
give
good.
your overall sense before you shorted this company, before you encountered the idea, what has your experience been like in this world of non-bank financial companies where they're not a bank, but they have a somewhat similar bank-like business and they're in that institutional finance world? Like what is your impression of that world been?
Well, it's hard to generalize because a lot of times when financials get in trouble, it's because they've been too aggressive. Usually, they found some magic way to grow their exposure, their lending book faster than everybody else, but while taking better risks than everybody else. That's usually the fairy tale that you hear, and they're effectively,
I
typically
haven't
they're
been
saying
using my
this time
Innervate
it's
near
different,
enough. I've used it
and
like twice this whole
ultimately
game, I just
it
realized.
never turns out to be different. Now, that's not exactly what the issue is here with Blackstone. So it's not that they were being more aggressive than everybody else. It's just that because they are lenders into the commercial real estate space, they have a decent amount of office exposure. It's the perfect storm. And with rates having risen at what was probably, for the most part, most people would not have said that the speed and
This game is
the
chaotic.
extent to which rates were hiked by the central banks was foreseeable. So it was kind of a black swan type of scenario here. And to be clear, unlike a really, unlike a financial institution that's really out over its skis, we don't think that the creditors to the mortgage trust are at serious risk here. I mean, part of that's also because we'd expect that Blackstone's mothership to bail out the creditors. But the equity we do think is, not just at risk, but we do think that the equity will ultimately take significant losses, being that it's at the bottom of the capital stack here.
How bad do you think it's going to be? I mean, in your report, which we can share, you said that you think there will be a liquidity crisis. Can you share how you arrived at the conclusion, as well as perhaps why Blackstone Mortgage Trust and not one of the many other mortgage REITs that is long commercial real estate debt?
Sure. So first of all, why Blackstone versus other mortgage REITs? Well, really the way that we came across Blackstone was we were talking to a credit investor with whom we speak every now and then, and they had come across there are 3 CLOs that Blackstone's mortgage REIT has sponsored. So Blackstone's book BXMT's book has 185 loans. Now, 37 of those loans are also in CLOs. And we understand from Blackstone's investor relations that those 37 CLO loans are representative of the U.S. loan book for the
Surprised
mortgage
these guys are
REIT.
doing
The U.S.
this well,
loan book
given
is
that
64% of the
I
loan
really
book.
don't know what
So,
I'm doing on.
The reason that we had this conversation with this credit investor was they were looking at the CLOs, and you can get granular data. You see who the borrower of for each of these loans in the CLOs is. You see what the net operating income on a TTM basis of the property is, what the debt maturities are and the amounts outstanding. And so when they were looking at what the NOI, a net operating income of these properties yields versus the debt, the amount of debt, so NOI divided by debt, it was well inside of what the cost of this debt is, absent these rate caps or rate swaps that we'll get into in a moment. So this is not to say that Blackstone is the worst or most exposed mortgage REIT out there. It's just that we were able to get granularity into the loan book, because absent that, if you're just looking at the 10Ks, you don't see, for the most part, you don't have enough information to figure out who the borrowers are, what the properties are, et cetera. So that's the case with these, with other REITs. I mean, we didn't, the way that we work, because we are only speaking 4 to 6 times a year, and we take, a few months to work on each project. It wasn't like, oh, well, that's cool, let's put it to the side and go see if we can find, even worse mortgage REITs. because, you know, as far as we're concerned, we have a live project here. This is something that's trading here and we think
Really?
is
Arb's
ultimately
chosen
worth
out
a lot less. Again, speaking about the equity. So
A
let's
hero
go,
has
you know,
lived.
now that we've convinced ourselves, we need to build a case that we can go public and is hopeful go public with and is hopefully compelling. Now, getting to the actual reasons we're short. And I want to point out that with the overall office exposure in Blackstone's book, Blackstone, we're not sure what the real level of exposure is. And Blackstone claims that it's a little bit north of a third. I think they say about 36%. But there's also mixed use property, right? So that's often office with some retail, maybe
How is this
office with
happening?
some condos, and we have seen a few properties where they're classified in mixed use, but they're 85% office, 90% office. So we're not sure how widespread this game is of kind of trying to, say that stuff that's effectively office is not office. But
It's an industrial building.
right, yeah. Well, they did this also with biotech, where they created a new category for biotech office. It's basically office, but we don't really need to have a strong view on office to get to where we did, because if you're looking at these CLOs and they are, if they are representative of the U.S. loan book, X some construction loans,
MVP.
then there's a real problem, because as we analyze the 37 loans, we divided them into 3 groups. So group C is the group that, absent rate caps or rate swaps, the cash flow.
Kind of interested in what that guy's saying, but I'll watch that later when I got to go to work. I think I want to try doing a game or two of StarCraft. Should I play a little Call of Duty? I could play some of the Call of Duty campaign. SC2 or Call of Duty campaign? Realistically, I could even play Search or something, but I bought the campaign, so I kind of want to play through it. Yeah, you know what? We'll do that. Why not? We'll play Call of Duty. Get maybe an hour in. Something like that. Which I don't think I don't think I even have Call of Duty set up for my game scene, so I need to add that real quick. We're still ironing stuff out, if I could speak properly. We'll go. Oh, hell yeah. Should we try to make our way through a little campaign? I think I'm gonna pause this quick and make an espresso. Oh. The game just like closed and reopened. I don't know if there was like a because I changed my display settings earlier. And the last time I played this, I was playing. Oh, it's doing something for campaign loading, anyways. Okay. Well, where is this? This first thing we want to do is get rid of the menu music. And then, like I said, I'm going to run and make an espresso quick. So we'll watch the gamer for a minute. Oh, I need to do all sorts of Stream Deck stuff with my game scene. I actually need to make it into a folder like my intermission one, and then add in all my, like, add in the cameras and everything. But if you would, the few lurkers in here, go follow Mr. D. Ray here. Smooth stroking. The URL and the name is on the screen there.
No,
All right,
I
BRB.
was just asking and got one response, and somebody else was doing something else, and
I don't know.
that's just how we die.
I don't know what you're talking about, dude. What?
If you hover over profile on the freaking Steam dashboard, you can see your stats from last year.
Okay. Yeah, I've seen it. Seen it. I've seen it. I've seen it. Oh. Okay. I'm gonna move in. I'm gonna keep moving in. See if I can find any more AP. Kinda wanna get out with something this run. I've been losing every run. Oh cool, I got lockpicks. I'm gonna see what... Never mind, I'm not. Takes too much time. Not enough heals.
Oh, I was on a fucking hill.
Wow, that hits. That reach is crazy. What are you even doing in here?
Come to life! Where are your pants at?
No pants for me. I'm a fast boy.
You're gonna die to zone standing there. Ren. Ren.
That boy dead.
Ren.
That boy dead.
Hey, you got 5 seconds.
He dead.
Oh my god.
That boy dead.
Does he got any heals on him?
I do. Here.
Oh, he had a couple band-aids. Oh my god, I can't hit him. It's no wonder he doesn't make it out.
Hey, you guys. Hey, hey, hey.
Come my way. Or take that portal, take that portal.
You. Hey, bing bong. Fuck your life. Bing bong. Fuck your life. Bing bong.
I'm going to stairs here.
Fuck your life.
Ren, you're back.
Yeah, I'm here.
I instant
He
revived
revived you.
you when you died.
Oh, did you?
Like seconds after you died, you're alive. Just standing there, dying to the zone.
I had no idea.
150
Oh
AP.
god, dude. Just
150?
slowly going down Wonder 3. I love it. I'm...
Yes, Nolly, it is.
150. My bad.
I missed you a little bit. I was going to make a nice cheeky little
almost
espresso,
don't even want to play.
which I'm getting a little better at.
I feel like I'm just gonna keep
at
going
oh,
down
crap.
the ladder.
I don't know if you're an espresso
Bum,
nerd,
bum, bum, bum.
but I'm trying to become
Well,
an
you
espresso
could have been
nerd.
out right there.
It's a week in the making
could've-
now.
I'll
Maybe even
admit
2
it.
weeks.
I got your crossbow though. if
You
want
stood
it.
there
And
for
I've-
15 seconds with me screaming at you.
I've already ordered like a handful of new espresso tools like that I had come in. So I got the initial machine, had never made one in my life, made it. I was like, this is 10x more better than regular coffee. And then I immediately like looked up some YouTube videos of like how to do it properly. And then it was like, oh, and you could have this tool and this tool. So I've already ordered like a new portafilter and this little tool that like helps you distribute the stuff as you compress it in the portafilter. And then I ordered a new tamper, like a self-leveling tamper, because when you push it down in the little deal, you don't want it to be like uneven, because then water will channel a certain way and it won't hit one side or the other as much. It's a whole thing. You can go down a real rabbit hole. It is indeed. Espresso connoisseur. I'm trying, but yeah, this is Dad. That guy's a lizard? I didn't know you could be a lizard. Who the lizard is? I was about to try to delve into a little Call of Duty campaign. Maybe I should even try just like search or something. What do you think? I already did a couple levels. Should we do... Yeah, I'll just do like 1 or 2 and then maybe I'll get in some search. I'll just go to resume. Do you consider yourself a coffee enjoyer, Nolly? Are you more of an energy drink fan? Because I do both. I'm just an overall caffeine addict. I have pre-workout powder, C4s.
1 minute! Tight! Quite's good to go! That's all gear on the ground if
Why is this game so loud? Holy shit.
Ramp! 30 seconds! Right, pull altitude is 2,000 AGL. Calm the close!
That's
how we do! Roger up at a rally point! Shut! Stand by! Go!
I need to turn this audio for this down. Yeah, Jesus. Like in my headphones and everything, it was crazy loud. Which I don't want to... I have like a little audio mixer thing, but I think it'll only lower the volume in my headset as opposed to the ratio of the volume for the stream.
Watcher 1 to Bravo. ISR is overhead. Be advised, Coney has 3 helos on the ground looking...
Oh. Mouse button 4. 1, 2. It's saying mouse button 4 is to cut my parachute, but it's not working. So maybe it's because I have this bound to double click. But I don't think that is mouse button 4, is it? I guess we'll try it. I'll put it back to scroll click for now. I need that on double click for when I'm playing StarCraft.
Extract points for the nuclear material.
Affirmative.
Yep.
These helos are your primary targets.
Not sure why I can't cut my parachute, but I can't.
Roger. Moving to
I guess I'll have to figure that out later.
Got eyes on you, Captain. I'll relay what I see.
I thought that guy was a homie because he wasn't attacking me for so long. Door stuck. Huh? Have you played any of this yet?
Stations, we're seeing Coney patrols on the outer perimeter. They're searching the area.
Stay on them.
Why? And there's no pause. Like, why can I not pause?
Stay on them.
Oh, there we go. Well, I want it to be on this game capture. It was working just a minute ago. Here, let me remove it and then I'll add it back. There's still so much I have to do to set up to like be properly swift with streaming again. Like I was just noticing that a little bit ago on my scene for actually, like this scene, the one I use when I'm in game, I don't have any of my like cameras or anything really set up for my mic muting and any of that stuff. So I need to still make a folder for this scene essentially on my Stream Deck and make it so I can turn my mic on and off and like my cameras on and off and all that good stuff. Did you have to work today, Nolly? Or are you still on vacation? All right. All right, I think we're here. Doing what? I know, aren't you an English major? Or you were like, how far did you go with degrees? I don't actually know. Do you have like a master's? I know you were, I think last time I talked to you, you were like a TA.
Copy, Watcher.
Careful, they're looking for you.
Bravo 7-1 in position. 6-1 in
You're finishing it up right now?
Alpha secure. 0-7 ready.
Bravo set 6, you're clear to proceed.
So then what type of jobs? Are you applying for jobs you would take when it, like once you have that? Once you have your PhD? Or are you looking to be a professor?
A recon drone could help scout the area.
So what all areas does the degree translate to? I feel like English
Bravo, be advised.
is so broad, you know?
You. Stay frosty for them.
So they copy, cut.
Like, are you looking to I guess what I'd be asking is like, what all titles do you look for with that? Like are you getting into like writing or editing? But then to me that seems more like journalism, or you might as well just be a law dog, damn near. I've heard a lot of really good lawyers start off by getting degrees in English and such, because it helps you word documents so much. No prob, no prob. You downloading Call of Duty so we can get in some hardcore search and destroy, or what?
Coney's got equipment around here, might be able to use it ourselves. Get our assignment. You don't heal.
Copy 6, that's your target. Seeing JLTVs closing on your position, 6.
I don't know what a JLTV is. Maybe define that parameter beforehand, nerd. This is a level that's like Warzone, right? It's kind of cool, I guess. There was already another one of these before.
Change, Captain. Get out of there. 6, Coney reinforcements incoming. Expect contact near the helo.
I wonder how many levels are like this. I'm not... Or is most of the campaign like this? Because I'm only on like the third campaign mission right now. Third or fourth. I don't actually know what my objective is right now. Ooh.
6 multiple Coney are near that helo. Expect contact.
Solid copy, what's up?
Doesn't say it somewhere on the screen, does it? Like, what my next kind of... what I'm looking for right now, or what I'm trying to do? Yeah. Right? In 2023, unique levels in 2023?
Clear price, no movement.
That's cringe. Just make it kind of open world and throw in some bots, some bot waves. Move on the helo. So I'm taking this bad boy. What do you mean move on the helo? Oh, there's a question mark on something over here.
That's the good stuff.
What am I doing to the helo? Am I blowing it up?
Copy. Got me nuclear materials, right? What else coming?
Keep standing post. Keep us posted. First Nation's first target's down.
Good work.
I wonder if that's what I was supposed to do. Seems like it, I guess.
Felt that explosion over here, Six. You got inbound. Captain, still not picking up any radiation. Johnny, Garrick, anything? Negative. Neither is Coney. If there's no radioactive material, what's Coney after?
Stay on it. Find out.
I wish they had the DMZ zone or game type in this one. I don't know if that was you and I talking about that the other day, Nolly, or who that was, but I actually kind of enjoyed the DMZ because, like,
UAV is on station.
you'd get in there with the homies, right? And then it's like you had little missions you're trying to do, but then you had that like intensity, like I need to be sneaky because there's other people in here, and like another squad could come fucking pop me while I'm doing my little mission.
Radiation levels are stable. Nothing's doesn't seem right.
Ghost, keep scanning the area. Update when able.
Roger.
ADS is for
Sector, you're on you, Bravo.
Target down.
Hip fire is for pro gamers. Resurgence, is that like similar? Honestly, the only online type shit I've played so far is Search.
Bravo, be advised. There are several supply drops in the AO. Take what you need. That building got touched by intel, John. Could be worth checking.
This game feels pretty good though. It feels a lot like the 2019 release, I think. Woo!
Bravo, be advised. Coney birds approaching with reinforcements. Coney reinforcements moving to the second helo. Be advised, UAV is off station.
If you die, you just come right back instead of doing the gulag. The gulag.
another helo.
Copy 6. Take it out.
Taking heavy fire. RPGs. Sending mortar coordinates.
Oh, I better not run towards my mortar.
Enemy helo's going down. Second helo's down.
Good work. One more to go. 6. Another helo is near your location. Multiple Coney on target.
Solid copy, watch out.
You poked the bear, 6. More Coney headed your way.
Holy shit, where am I getting hit from? Have no plates?
07. Any change in radiation?
Negative, Watcher. Doesn't make sense. They should be in the reactor by now. Power's off. Doors are sealed.
Well, let's keep it that way.
Bravo 6, be advised.
Where the
Coney armored
plates at?
helo is overhead.
It's a useless little area.
Should be a launcher in the gear drops. Would make short work of that helo.
Hey, there we go. Now we can play it up.
John got a mounted MG coming your way on an armored vehicle.
Oh, I don't think I'm gonna kill that. I need to switch my hotkeys a little bit. A few things that don't quite feel right. Oh, where'd that guy come from? Woo! Woo! Run, run, run. They got guns with auto
Eyes on the
turrets, or
last
fucking
helo.
Copy, take it
trucks with auto turrets on them. I don't know how I feel about that. One was just in there looking at me.
Sound turret's active.
You will need a clear shot on the helo.
Six to watch out. Full fire.
Copy your call. Fire inbound.
Bird down, Price. Nice one.
Effective fire on the helo. Last helo destroyed.
Nice work. Whatever Coney's after stays on the ground. Be advised, Bravo 6. Coney has
I
entered
don't
the
really like
reactor.
that
You
big
need to get down there.
gun. It's a little
Move
bit
into the
slow.
reactor. Still in contact.
Copy that. All Bravo,
I
collapse
like
on the
being
reactor now.
agile. All those docks thing. Violent speed and momentum. Somebody shooting at me? Can't actually tell. I hear stuff. plates again. How do I get out of here?
6, entry to the reactor is in the domed building center of the facility.
More plates, please? No? Okay. Woo! Is that like another auto turret thing? Oh, yep. Rip. Don't want to go that way. I desperately need plates still. Door's stuck. I'm gonna die now, probably. Let's see if I can get in here. There's some good shit in here, it looked like. Oh, it's up here. Fuck. I need plates bad.
Am I clear to move?
Affirmative. No activity at this time.
Assault rifle. Try this one for a little bit. Whoa! Where the hell did that come from? Fuck, can I even kill this thing? Ah, I didn't mean to do that. How many of these do I have? I want to detonate them. Apparently that truck's unkillable. Couple Simtex. Couple C4. It's entirely unkillable. Oh!
You're clear, Captain.
Be advised, Coney's regrouping all over.
Thought I changed my channel points the other day. Maybe they take some time to change, actually. So I switched them to CBDC, Central Bank Digital Currency, of course.
On the roof, seeing skylights. Potential entry point.
Now we're talking.
Finally. Okay. Cheeky little sniper. Potential entry point. Wasn't I already in here?
Moving into, yeah.
Copy 6. Entry to the reactor is an airlock. Keep your eyes open.
Ooh, is for me?
Watch out, I'm at the entrance.
Copy that.
Making entry.
I've got an enemy helo overhead. It's at the reactor, deployed rope. Find something. I'm bringing in secondary extraction. We have to stop them now.
All stations. Coney's extracting canister from the reactor.
Confirm the contact.
All Bravo. Put fire on that helo. Bring it down.
Am I supposed to be doing something? I think I'm supposed to be taking that.
All stations, Coney's extracting chemical weapons.
Only taking the gas out on that helo. We're gonna lose them. Watcher, can you track them?
On it, Ghost. Stand by.
This is 6. Reactors sealed. I'm locked in.
ISR shows Coney personnel entering the reactor.
I can't stay up here. There's no cover.
I point where you can. Red
There's no cover up here.
You know, this game kind of feels like it has a little bit of a pull. You know, like the similar to like what CS:GO would have.
Gas is closing, Bravo. What's your status?
Inbound now, bot. Stand by.
Like you gotta kind of know the pattern of the gun a little bit. Like,
Gas is filling the reactor. It's compromised. Bravo, I gotta move from cover and go high. You better be close.
Captain, ropes up. Grab the rope. Get out of that gas, Bryce. Up the rope.
Got it.
Grab my hand. Got it. We got you, Cap.
Stay with us, sir.
Cap. Cap. Stay with us, sir. 6-2 to Watcher. We need medevac now.
Morning, sir.
Take it easy, Cap. You beat the gas, but you still need some time to recover.
I'm fine.
Got a headache? Nausea?
Always.
He's good.
Was worried your face was gonna melt off like those other poor bastards.
You ask me, it'd be an improvement.
Coney got away with the chemicals.
Affirmative.
Makarov has been out of prison for 6 hours and he's already ahead of us. The fuck is in that gas?
Remnants of Barkov's program.
Sorry.
Highly concentrated, far more lethal.
One pod contaminated the whole area.
They made off with enough to kill a whole country. Right now, he's in Farrow's backyard. We've got to find her.
Laswell, it was chemical weapons. Makarov has highly concentrated sarin gas.
Did you secure it?
Negative.
Captain almost died trying.
Where is he?
I'm here, Laswell. Where are the missiles?
I tracked Farah's missiles to an abandoned bunker complex. Built during the Cold War.
We know those bunkers.
So does Farrow. Why does Coney need a silo for portable missiles?
Exactly.
We'll split up. I'll RV with Farrow just off the X.
We'll spread out and sweep the complex. Get those missiles back.
Good. I'm heading to Arklov to meet a contact who may be able to help us.
Castovian military base. How are you getting in there alive?
Carefully. I'll report back when I'm able.
I'll see you on the other side.
Good hunting, Bravo.
6 to Ghost. At the rally point, what's your status?
On target, Charlie.
You got Alpha, Kilo takes Bravo.
Roger. Stand by. Fuck's sake, Farah.
Head on a swivel, old man.
Cinematics and the graphics and everything in
Russ
this
is
are
back in Kazakhstan.
good, expectedly
Contractors.
so, but good.
Connie Group.
I don't even have
Pulled
everything
static
maxed. I'm
chemicals
at
from up
like,
north yesterday.
instead of
Stole
being
my
like
missiles at
ultra like as high
sunrise.
as I could be, I
Less
think
than
most of my
24
things I
hours
set to
after
like
Vladimir
high.
Makarov walked himself out of a prison.
Works quickly.
Even though with a 4080 I should
He's
probably
making
be
a
able to
false
run
harmony.
it at max.
Let's move.
Who sent you the missiles?
Shadow Company.
Shadow Company don't have that kind of firepower. They're errand boys with tac vests.
They're allies.
They carried out a hit on my men.
Commander Graves did this.
Yeah, well, he had his orders, yeah.
From who?
General Shepard.
General Shepard's a real one.
Did Shepard send you those missiles?
My weapons are my business.
He's a very dangerous man, Farah.
We are all dangerous, Captain. Look. I never want to lie to you, but I can't tell you everything. What you call classified, I call secrets. My country is under siege again. My brother warned us.
This could go a lot deeper than Kazakhstan.
Well, then let's help each other. Like always, I hope you trust me.
Implicitly.
Good. See you on the other side.
All stations. Bravo 6. Kilo.
Kilo set.
Copy. Your drone's on station. You and Farah have the con. Affirm. A lot of Russians. Coney's brought an army into Kazakhstan.
No missiles in sight.
Am I supposed to pop these guys, or am I like fucking stealthing about?
Marking now. You'll need a keycard to get in.
I was right. We took down a captain in our sector with a keycard earlier. Had a red beret. Roger. Red beret.
I spotted one near the steel buildings, north of the entry.
Red beret. That's my target.
Good. Track him and get his keycard. Use it on the door for entry.
And you?
I know another way in.
Copy.
Thought I was in like a helicopter gunner thing right there.
Well, stay on comms. I'll see you inside. Sniper up on the tower.
Your shot, your call.
Pushing down from the mountainside.
The field may conceal your movement.
Right. Silent and violent.
6. Drone still up. Use it if you need it.
Tony's planting ULF fingerprints on the base. Makarov's launching a false flag attack. Those missiles are American. He's pinning it on Farah in the west.
So now we're back to like a regular
We need to find out what the target is before it's too late.
regular match where it's or campaign level where I don't have to get plates and shit. Aw. I wanted my last checkpoint to be before those guys spotted me, so I could try to go through this without probably how you're supposed to go through it. In a stealthy manner.
-1.
The M21 EBR, is that what this is, right? Oh, EBR 14.
Find the captain, get his keycard.
Be advised, Soap and Ghost are in. Spotty signals underground.
See, this is more of a campaign level that feels a bit normal.
Check.
Which, if I'm going to be playing campaign, I'd rather have kind of missions like this. Unless it was all the other way. But it feels kind of weird that it switches back and forth.
2 for 1. I've got eyes on the captain.
Why can I not hit that guy? Is that just me? I didn't realize I could hold. Oh, I thought I picked up that other gun. Okay. Or not. What, am I pressing it too fast? Yeah, there we go. I was like double clicking. My objective is to find some bloke with a red beret and get something from him, I believe.
Reload. Connie Captain's down.
You need that keycard for entry.
Our keycard secure.
Captain, you have more Coney pushing on your location. Use the keycard to get in.
Get in where?
Get through the door, I'll find you inside. Pushing interior.
In here? In where? Like, where am I going? Go in. Go in, they say. In where? Oh, okay. That hole in the ground. The hole in the ground is what we're after. Oh, that's not what we're after.
Come in.
Watch your six, old man. They know we're here now.
Affirmative. Let's find those missiles. Heading down.
Is there anything good I should have around here? What was that, bulletproof glass?
Never.
Oh, hell yeah.
Got your back, Captain.
Appreciate the assist, Kilo.
How'd she get in here? Oh, okay.
On you. Go loud.
Let's move.
On your six. Check the corners.
I don't know if you ever said, Nally, did you say what game you were installing? Didn't you say you were installing a game? Alright, so what are we doing here?
Push it up top.
End of the hole.
Clear.
We're after some weapons of some kind. Okay. Okay. I went in there a little hot.
Clear.
From where? What was that? I mean, it was an explosion. It was a grenade. I'm calling bullshit on that. That guy was hacking. that a dude?
Captain, do you hear that?
They're opening the blast door.
They're opening the blast. Of course, that's what I was thinking. Blast door is
We have to
open.
push up to the second floor.
Can we use these computers to deactivate the launch?
Negative. I'll need to access the control box on the missile.
I'll access your control box here in a minute.
Those are the silos at the end of the walkway. Go! If we can get to the missile, I might be able to disarm it.
Bet. Say less. Say even more less, actually. Where's she wanting me to go?
The launch platform is on the other side of this door.
Copy.
It's locked. I'll get it open. Stand by.
All stations, we located 2 missiles. The warheads are capital chemicals. I say again, the missiles have chemical warheads.
7-1, repeat your last.
Kind of like how you can stabilize even with a ACOG. Like back in the day, you could only stabilize with full scopes.
Clear. The missile. They're going to launch it, Captain.
Fuck.
Not if I have anything to say about it.
Captain, you copy?
What do I do? Where do I go?
Coney's put Makarov's chemicals into the warheads. They're gonna launch.
My missiles. My flags, my country.
He wants the world to think you did this.
I'll hold it down.
Missiles launch, they will. Chemicals. This missile has them too.
Farah, these are your missiles. There has to be a way to disarm it.
There is. Get on the control box. We can do this together.
Where is the control box? There it is.
I'm in.
She's in.
Ready?
Stand by. It's too late to disarm. We have to let it launch.
What?
We close the blast door and detonate.
It's hiding the chemicals in a bunker.
Yes. Get to the surface, find the blast door controls, and close it, Captain.
Where will you be?
I'll get to a safe position and hold the launch as long as I can. Go, now!
Wait. Probably could have been more tactful about that. Perhaps.
I'll hold the launch as long as I can. Just get to that tower fast.
I'm going. Woo! Juggernaut! What? He just bashes me and I die?
Will you be?
I'll get to
That's a
safe
load of
position and
horse
hold the
shit.
launch as long as I can. Go, now! Holding. Set for contact.
Ah!
I'll hold the launch as long as I can. Just get to that tower fast.
thought there was a couple guys back here last time. Is there grenades back there? I'm gonna need grenades if I'm gonna kill this Juggernaut, I think.
Station's Coney's initiating missile launch at my location. Can't stop it. Deploy base in Castovia.
Oh no. Might as well. Kilo, send in now.
Copy. Go to the towers, get to the controls.
Cap, visual on a Coney helo incoming on your position. They're bringing in reinforcements. You need
Ah,
to move.
no.
Coney's all over the surface. They're guarding the tower. Together then.
Alright, that's enough of this game. That's enough of that for now. I think perhaps... You downloaded Heroes of the Storm? Oh, hell yeah. Or the other HOTS. I think there was another... What was the other game we called HOTS? Oh, it was one of the StarCraft expansions. Heart of the Swarm. Oh, hell yeah. It's pretty fun. I mean, it's one like I was saying last time, you kind of got to play it with people, you know? Like you really can't, it's not ideal to try to play Heroes of the Storm solo, although I do it from time to time. Ideally, you want to have at least a couple other people that are playing. But I think, Mr. Nolly, I think I may hop off, and there's a couple other things I want to set up for my Stream Deck / stream to make things more fluid. Like I was saying before with the cameras, and like my intermittent scene has its own like folder, like this scene where I'm at right now, and I can control all my cams and do different stuff and mute my mic and change my audio source and everything, but I don't have that for my game scene yet. So I may do that, and then before too long, I'm now. So you said you're looking for work. Are you currently not working? I mean, you said you were still finishing up your degree, so I mean, you're working on the degree. But because the reason I inquire about such is that I have so I work tonight, because sadly I work nights. And but then I have Thursday, Friday, and Monday off. Because originally I had planned to go to my mom's, but it sounds like that's not going to happen. So I will be around. It's going to be just lifting and gaming most likely for those days. And so I'll be around. We'll have to get some Heroes of the Storm in. Can you still host people, Nolly? Do you know? Because I only see a raid option right now. /host. $10.4 will do. They must have got rid of hosting. It's just raid now. /raid. Huh. I wonder why they did that. I mean, it kind of makes sense, I guess. But all right. Yeah, I will message you. We'll get some gameplay in.